Good morning, everyone. Could you guys please confirm if the audio is clear and screen is visible to all of you? Actually, my headphones are not charged. Yes, clear, perfect. All right, so how is everyone doing? Yes, perfect. All right, so let's start the live stream. If you guys have any questions hanging in there, hanging somewhere in the middle, right? Hanging somewhere in the middle. Hanging somewhere in the middle of nowhere, actually. Uh, all right, guys. So if you guys have any questions that you would like me to respond to specifically, I have chat open in front of me on the right monitor. So you're not taking any question. Yeah, I'm definitely taking the question. So let's start with the questions today. Uh, now we always start with the updates and all those things. Let's start with the questions today. Okay. Any questions? Any chat requests? Anything? Um, you can drop in the chat box. Hey Nick, hope you're doing good. I'm supposed to meet you in Birmingham, right? Hey Fluorescent, MLN USDT. Yeah, so we do have. Let's talk about this first of all, okay? Any update on EGLD? No, we are in that short position. We are in the BNX as well. We are in the MLN as well. We are in the VGX as well. Then we have DAO, ORDI, Osmos, Sol, UTUM, BTC, uh, and ETH. So, as you can actually see that I have this watch list open right in front of me. It's called Charted. All of these pairs we are currently in, uh, all of these positions are actually open for me. BNX about to hit stop loss. Let's see what happens with BNX. Although we have just touched the most violent coin actually, but let's see what happens with BNX. I did mention in the reasoning also while sharing the trade as well that it's actually a sort of risky coin. It's mainly because if you would just go back and read the reasoning, then it says that a lot many crypto Twitter influencers they have been massively shilling BNX. So, you should always try to stay away from these sort of tokens. You should not try to long them, you should not try to short them because anything could be happening with them. Okay? It could just it could just fall like 20%, 30% down. It could just straight pump 40, 50%. That's the risk with that's the risk with these tokens. When a token gets massively shilled by crypto influencers, it's always at the risk of having a massive pump or having a massive dump, right? Yeah, let's arrange a meetup. Yeah, yeah, definitely, definitely. For all of you who are from UK, we can definitely have a meetup whenever you guys want, okay? So first of all, somebody mentioned about MLN, okay? So let's talk about MLN. First of all, uh if you would talk about the rest of the confluences, for example, the EMAs, for example, the quarterly or the ELD VWAPs or any other dynamic lines, then it's not really going to look like a good setup because the majority of the dynamic lines, they're actually way above the current market price, which means that they would be acting as a good resistance area. Okay. But the major reason for taking this spot position on MLN was because if you would just go back in time and see that, historically speaking, this has been a very important level, okay? If I change the time frame to daily, you would actually see that historically speaking, this has been such an important level, right? So we are on the daily time frame chart. You can see that there were multiple rejections. Price was trading below this region, and finally it broke above. Had the first retest, we had the second retest, third, fourth, multiple. So from 27th of February 2024 all the way to 16th of June 2024, for like, past 5 to 6 months, price has been able to stay comfortably above this region. Then finally broke below. We had the first retest. Then finally, once again, we broke above. And this is happening to be the first retest if you would focus on the daily time frame chart. Although there has been no consolidation, but this is something very important. Whenever you see, whenever you would open up a spot, whenever you would open up these coins, right? And for those of you who do not have these watch lists created, make sure to let me know towards the end of the live stream. I would share the link with all of you. As you guys can see, I actually have very useful watch list already created. So I have Binance BTC pairs in a separate watch list, Binance ETH pairs, Binance futures pairs, Binance spot pairs, Bybit futures pair, Bybit spot pair, then I have Forex pair, then I have KuCoin spot pairs, Mexi futures pair, Mexi spot pairs, MT5 pair, CFT. Okay, this is not something relevant to you guys, but anyways, uh, whenever you would open up these spot pairs, okay, whenever you would open up these pairs that is specifically uh, only listed in spot and not in perpetual futures, you would actually notice this thing that they would have these sort of movements quite a lot. Okay, if I show you, um, let's open up the Binance spot pairs. Okay, and let's try to open up some of the recent charts. Okay, for example, Acro. Okay, in the case of Acro, you can actually see that this coin very much. Uh, I'm not really sure, but it's possibly it's only listed in spot and not in futures, right? First thing that you would actually notice, first thing that you would actually notice, whenever these coins they pump massively, is that they would have a big retracement, and there would be a big move towards the upside followed by that retracement. This is something that usually always happens, right? For example, in this situation, if I would draw Fibonacci retracement levels, okay, if I would draw Fibonacci retracement from this swing low to this swing high, you would actually notice that price came back to 70.5% fib level, 78.60 fib level, and then we had this massive move towards the upside back again, 29%, 30% move. Okay, so this is something that you guys can actually do by yourself as well. Just go and open up the Binance spot pairs, open up the watch list for the Bybit spot pairs, or any other watch list for the spot pairs, and rank these coins as per the percentage change positive or percentage change negative. Basically, rank them as per the top gainers or top losers. And the first thing that you would actually notice is that all those coins that are in top gainers, they would eventually be falling into the top losers, and then they would fall down to 70.50 or 78.60 fib levels, and then they would have once again a decisive move towards the upside. Obviously, you can use a few other confluences. This is not a standalone strategy, right? It's not like you would open up any top gainers or top losers and you would start drawing Fibonacci retracement levels and you would say that, okay, you know, they're going to go up from here, or they're going to go down from here. It's not like that. Obviously, you would be making use of few other confluences also. But in this situation, for example, I would have definitely taken a spot position in Acro if I was able to spot this. Once again, the reason for doing so, price breaks above this resistance area. This was the resistance area. Price breaks above this resistance area, and then there is this massive candle towards the upside, then price impulsively is moving towards the downside. And I have said this from time to time that whenever you see this sort of movement, right, whenever you would see this sort of movement, price impulsively moving towards the upside, there are like huge candles, and then impulsively moving towards the downside, and then there are huge wicks also. Always remember this information. Whenever there are huge wicks, these are the most possible sweet spots where you can actually draw Fibonacci retracement levels. So in this situation also, it's not a huge wick, right? But this definitely is a huge wick. This would obviously be your only possible choice for drawing for the selection of swing low. This would be your only possible choice for the selection of a swing high. And as soon as you would draw Fibonacci retracement levels, you would notice that price retrace back to 70.5, 78.6% fib level, and then we had this impulsive move towards the upside. Okay, once again, you know, uh, you would be buying spot around here, and then you would be placing your stops below this low, and then you would have an extra layer of support in with this horizontal support around here. So you just don't have these Fibonacci levels acting as a good support region, but you would also have, this horizontal
ठीक
support as well.
है
Okay, so that's why this is something that actually makes this is something that actually makes these
अच्छा अच्छा
setups quite good.
हाय हाय
You know,
हाय हाय हाय
ਜੋ ਨਾ ਨੰਗੀਆਂ ਹਰ ਪਾਸੇ ਪੈ ਰੱਸੀਆਂ ਲਟਕਰੀਆਂ ਹੈਗੀਆਂ ਇੱਧਰ ਰੱਸੀ ਖੋਲ ਦੋ ਉਧਰ ਰੱਸੀ ਖੋਲ ਦੋ ਯਕੀਨ ਕਰੋ
okay. I think my headphone just got turned off. So I hope you guys were able to hear me, right? I was explaining the reasoning behind taking the MLN, spot position. Please let me know if the audio was you're disconnected or not. Audio is fine now. Um, actually just forgot to charge my headphones. Heard you up until the other guy joined with Mike. Okay, so anyways, so we were talking about these sort of setups, okay? And always pay attention to always pay attention to the tokens that are specifically listed in spot, right? It could be a watch list for Mexi, it could be a watch list for Bybit, it could be a watch list for Binance, okay? It's as simple as that. For example, if I would open up the Bybit spot pairs watch list. Let's rank all these coins as per percentage change, positive or negative. So basically rank these coins as per the top gainers or top losers. Okay, you can simply do this by clicking on the change percentage change icon. Okay, so let's try to see what exactly is happening with this first top gainer. It has gone 91% during the past 24 hours. Okay, nothing much here. Let's move to the 4-hour time frame chart. Is there anything interesting? Not exactly. Okay, let's look at a few other ones. Nothing interesting. Although you could have taken and this, yeah, this is actually a good example. Okay, this is actually a good example. So you have a 4-hour support lying somewhere around here. It makes an impulsive move towards the upside. There is this huge wick around here, and then we have a huge dump towards the downside. Okay, you have an impulsive move towards the upside, followed by this huge impulsive move towards the downside, quick sell off taking place, and then there is this huge wick as well. What exactly would you be doing immediately? You would take out your Fib tool and then select the point where your Fibonacci retracement tool is going to retracement level is going to start from. Okay, you could do it from somewhere around here. You could do it from somewhere around here. In my opinion, this is the most obvious choice. Okay, this is a much better choice. So you draw your Fib level from this swing low to this swing high, and you would notice that once again price retraces down to 70.5% level. You would be taking your first entry is going to be at 70.5, your second entry is going to be 78.6, your third entry could be at 99 or 88.6. Your stop is obviously going to be placed below this low, and then you can target the new regions ahead. In this situation, you can clearly see that you would have already got a 31% move. Okay, the same concept applies. Okay, but make sure that the coins that you are actually selecting, they are mostly listed in spot and not in futures, right? This is a very common occurrence with spot pairs. They would have an impulsive move upside, they would have an impulsive move downside, then they would fall back to some sort of horizontal support, and then there would be some sort of Fibonacci level around here as well. Okay, a strong Fibonacci level. Okay, uh, let's take a look at few other spot pairs also. Let me see if I'm able to find similar example. Okay, a very similar example. An impulsive move towards the upside, impulsive move towards the downside. There is a huge wick. This is your obvious choice for swing low. This is your obvious choice for swing high. you would have noticed that price immediately fell down to 70. Your first entry is going to be somewhere around here. Your second entry around 78. Your third entry around 88. All three entries would have been filled, and then you would be targeting the next regions ahead. Okay, very simple. Once again, impulsive move upside, impulsive move downside. This coin definitely looks like a shit coin. It's only listed in spot. So yeah, that's what you would be playing on. Even if you would consider this move around here, even if you completely ignore this leg, this impulsive move, or this impulsive move downside, even if you only consider this impulsive move upside, the second one, then you would draw fib from this swing low to this swing high. You would notice that once again price retraces down to 70.5% fib level. You would place a stop below this low, and then you would target the next region. Okay, it's once again extremely simple, extremely easy to understand. Okay, what does the 0.886 fib level mean? It's it's just like, it's just the same explanation which which true for 0.705 or 0.786 or 0.61 level. It's actually the same thing. For those of you, who don't know, like really, he mentioned that what does 0.886 fib level mean? For those of you who don't know, you would have to understand the complete logic behind drawing these fib levels, complete logic behind this fib retracement tool. Okay, so let me try to explain this as well. Let's suppose that you have impulsive move, impulsive wave, retracement wave, impulsive wave, retracement wave, and impulsive wave. Okay. Now, this is actually a very important question, because this would be giving you the answer that why you should be drawing your Fibonacci retracement, why you cannot really draw your Fibonacci retracement levels arbitrarily. Okay, why is it so important to draw Fibonacci retracement levels only uh, on impulsive waves and not on retracement waves? So, as the name suggests, Fibonacci retracement tool or Fibonacci retracement levels are basically giving you the length of the retracement wave. Okay, so for example, how would I draw Fibonacci retracement level in this situation? I can draw it from this swing low to this swing high. If I draw it from this swing low to this swing high, I can actually see that this was my impulsive wave and this is my retracement wave. And price retraced down to 65% or 70.5% fib level. Just for the sake of explanation, say that let's suppose price retraced down to 88.6% fib level, or you could call it 0.886 or 88.6% fib level. Now, what exactly does this mean? This means that, this retracement wave, a very good and easy to understand way is that you would compare both of these waves. This is your impulsive wave and this is your retracement wave. Okay. If I compare both of these waves, the length of both of these waves side by side, what exactly the retracement down to 0.886 telling you, or 88.60% telling you? This retracement is telling you that this retracement wave, this pullback wave, it is 88.6% in length of this original impulsive wave. Okay, if price only had retraced down to 61.5%, 61.8% fib level, then it would have meant that this retracement wave right here, it's 61.8% in length of the original impulsive wave. Okay, this is the exact same logic, why we always draw Fibonacci retracement levels on impulsive waves and not retracement waves. An exact same reason why you cannot draw Fibonacci retracement levels arbitrarily. A lot many times people would just open up the charts and say that, okay, let's draw Fibonacci retracement level from this swing low to this swing high. No, you cannot really do that. Reason for this is because this might simply just be a retracement wave. First of all, you need to be able to differentiate between a retracement wave and an impulsive wave. And then you can only draw your Fibonacci retracement levels from the start of the impulsive wave to the end of the impulsive wave. It could be an uptrend or it could be a downtrend. Because and the purpose of doing so would be to give you the length of the retracement wave or the length of the pullback wave. Okay, this is the same exact logic, and as the name suggests, also the name for the tool is Fibonacci retracement level. It's the tool that is giving you the length of the retracement wave. It's not the tool that's giving you the length of the impulsive wave. Okay, It's not the tool. For example, if you would draw Fibonacci retracement level from this swing high to this swing low, a lot many of you actually do the very same mistake. If you would draw Fibonacci retracement level from this swing high to this swing low, there is no point of doing that, because this is basically a retracement wave. This is basically a pullback wave. And if you would do this, you're basically trying to find out the length of the impulsive wave using the retracement wave. You are basically saying that where exactly would this impulsive wave end? Okay. It's using the impulsive wave, you find out the length of the retracement wave and not the other way around. Okay. It's extremely simple, extremely easy to understand thing. So fib levels is not an indicator, it's just a percentage calculator. Yes, exactly. It's simply just a percentage calculator. And by the way, it's a dynamic indicator for those of you who don't know. There are two categories of indicators. There are static indicators and then there are dynamic indicators. The static levels are the ones that do not change or that do not develop over time. For example, horizontal support and resistance. If you would draw a horizontal support around here, and it's not like after 10 days or after 1 week or after 2 years, it's not going to be here. You know, if there exists a horizontal support around here, it's always forever going to be around here. Okay, because these levels, they do not develop over time. Okay, and these levels, they do not get created, or they do not get created over time. But it's not the case with the Fibonacci levels. A lot many people are always confused that why do Fibonacci retracement levels, they fall into the category of dynamic levels, even though they're only horizontal levels. The reason for this is because as the waves progress, as the new waves get formed, new Fibonacci levels also get formed. For example, why exactly, once again, the question is that why exactly the Fibonacci levels or Fibonacci retracement levels, they fall into the category of dynamic levels and not static levels. Although if you would draw Fibonacci retracement levels, they perfectly look like static levels, right? They're not changing. But the point here is that if you would draw fib from this swing low to this swing high, levels, they would be looking different to what they would look like if you would draw fib from this swing low to this swing high. Which means that as soon as the new impulsive wave is formed, the Fibonacci levels, they would be progressing over time. They would be developing over time. They would be changing over time. And that's how they're dynamic levels. And yes, Nick, they are literally just simply percentage calculators. And once again, as the name suggests, a Fibonacci retracement level or a Fibonacci retracement indicator is simply just telling you what exactly is the length of your retracement wave in comparison to your impulsive wave. Okay, could we check BNX and BTC? Yeah, sure, we can do that. Uh, we can check PNX and BTC. First of all, let me just take all of the rest of the questions also. Heard you up until the okay. Um, Question is that when there is daily support and resistance level, will that be the same level for the 4 hour support and resistance too? I tried drawing the 4 hour support and resistance, but I ended up with daily. Yeah, it's a very important question actually. Uh, you know, as soon as you would go to the daily time frame chart, for example, if I would go to the daily time frame chart, my support and resistance, it's going to look something like this. Okay, this is going to be my support and resistance. As soon as I would, let's move to the daily time frame chart. Um, this is the daily time frame chart, right? Let's remove all of these things. If I would draw my support, and the short answer to your question is that they should be looking exactly the same. Okay, they should not look different. As soon as you would move to the lower time frame, for example, on the daily time frame chart, this might be your support and this might be your resistance. Okay, as soon as you would move to the 4 hour time frame chart, there would be multiple supports and resistances in between these two levels. As soon as you would move to the 5 minute time frame chart, there might be thousands of different supports and resistances in between these two daily support and resistance levels. Okay, this is the short answer to your question. And they should exactly be looking the same. The second answer is that, the second more detailed explanation is that, for example, this is your resistance and this is your support, right? As soon as you would move to the 4 hour time frame chart, these regions, they are going to look little bit too wide. Okay, what you can actually do is that you can move to the smaller time frame and you can try to narrow down these regions. Okay, you cannot simply just have two wide regions in order to take a longer short position. Okay, you need to narrow down these you need to narrow down these levels. You cannot say that okay, price is going to be uh you know going to be staying in between these two levels. You cannot really say that, okay, this that's where I would be taking my long position, and I would be placing my stop below this support area. Because if you would measure the percentage, you might possibly notice that it's an 11%, 12%, 13%. So you would have to narrow down this region. You would have to narrow down this level, okay? And in order to do that, what you can do is you can start from the what I usually do is that I usually start from the daily time frame chart in order to draw support and resistance, and then I drop to the smaller time frames like 12 hour, 4 hour. I do not go below 4 hour to draw support and resistance, just to make those drawn levels more precise, just to make those drawn levels a little bit more perfect, a little bit more precise. I just drop to maybe 4 hour time frame charts, 8 hour, or the 12 hour time frame charts. So is the 4 hour zone correct? Yes, it's perfectly correct. It's perfectly fine. Even though on the daily time frame chart, you may notice that, let's suppose you draw your support and resistance on the 4 hour time frame chart, and then you move to the daily time frame chart, and you would notice that on the daily, price is not really giving respect to that level. Once again, the reason for this is because a daily time frame would have, if let me give you a very quick example for this. If I open up the BTC chart for you, okay. So on the 4 hour time frame chart, you would be saying that, okay, this is my drawn resistance level. Price actually gave respect to this level. Broke below this area, then came back, retested, and then we had a complete rejection happening. If you would move to the daily time frame chart, you would say that price did not give any respect to this level because it just broke below, then came back simply up. Okay. So you would say that probably your drawn level, it's not really correct, but it is actually correct, because if you would drop to the 4 hour time frame chart, you would see that a lot many things were happening in between that daily candle. Okay. Even if you would drop to 5 minute, 1 minute, like 15-minute time frame charts, you would notice that each one of these 4 hour candles, they would have a complete story behind. Okay. So a lot many things would be happening, a lot many reactions would be happening. Okay. So what once again you can do is that you can draw your support and resistance on the higher time frame levels, or it's just completely up to you. You can start from the 4 hour time frame chart as well, and then go all the way up to a daily time frame chart. But they should exactly be looking the same. Okay, they should not really be looking any different from each other. I hope I was able to answer the question, Michael. Okay, so now we need to talk about BTC, right? First of all, I would be sharing the complete update regarding BTC, but before that, uh, I would like to take a few questions related to this. Do we have any questions related to the current movement of BTC? Are you guys able to understand it or not? Okay. Do we have anything specific that you guys would like to ask? Just let me know. And then I would start the update. Yes, okay. BNX. Just like I meant, okay, let me take a look at BNX also. Let's see what happens with BNX. There are like 20 more minutes for this channel to close. I don't really know. I don't really think it's going to survive, because once again, it's a very risky position. But yeah, we'll see what happens with BNX. Tell us what's the current movement. Okay. This spot play on BTC, is it basically trading the range? No, it's not really trading the range. Uh, because if we were range trading, now this is an important question once again. If we were range trading, then we would have taken, uh, you know, a long position only if price had swept this low area right here. Okay. I need not to explain the range trading part because I have already done that in the previous live streams also. But yeah, this is not really based upon range trading, because whenever you are doing range trading, you need to either see the sweep of the range high or the sweep of the range low. In this situation, the sweep of the range low has not really happened. Okay, this is your range low right here, right? So okay, so let's talk about the current movement of BTC. First of all, let's pay attention to this here. This rejection around 64, this rejection around 64K, it was very much anticipated. Now the reason for this is because, you know, the first retest, I always mention this thing, the first retest is always the single best opportunity to take a long or a short trade, right? So in this situation, price breaks below this level. Okay, this was a support area previously. This was a resistance area, rejection, rejection, rejection. Price breaks above, consolidation comes back, retest, then goes up. Okay, then there was this another retest, a small bounce happening. Then finally, price breaks below this area, consolidation happens, and this was although not a perfect retest to this level, but this was actually a retest at this level. Okay, so the first retest at this level, and the first retest once again, it's a very good opportunity to take a long or a short position. So in this situation also, this was the first retest, and it was very much understandable that price would be having some sort of rejection around here. The second reasoning that may have pointed towards taking a short position is because there were two equal highs formed around here. So once again, the simple man theory. I'm a simple man. I see equal highs being formed. I take a short position. I am a simple man. I see equal lows being formed. I take a long position. Okay. So in this situation, as you can see, there are two equal highs. There are two relative equal highs formed around here. As soon as you would spot these equal highs, you would try to take a short position. Although there is significant amount of liquidity resting above these equal highs or below the equal lows, but we are not going to get into the details of that. It might get a little bit complicated, but yeah, in this situation, you could have taken a short position. The first logic behind taking a short position, and I'm not saying, take a short position and go and, just try to catch the move all the way down to 50K or 49K. No, I'm not advocating that there might be 50K or 51K. I'm just saying that this may have been a good short position. First, because price was having a rejection from resistance area. Second, there were two equal highs being formed. Third, once again, since it's a downtrend, price is continuously making lower lows and lower highs. All you have to do is just draw Fibonacci retracement levels from this swing high to this swing low. Once again, price was having rejection at around 70.5, 78.6% fib level. You could have moved to the 5-minute time frame chart, see the structure shift happening, and you could have taken a short position around here. Very simple, easy to understand thing. You know, uh, that's where the Fibonacci retracement level is meant to be drawn. For example, once again, if I draw these waves, you have impulsive wave, impulsive wave, corrective wave, impulsive wave, and corrective wave, once again, impulsive wave. Okay, this is the same exact structure you are seeing right here on the chart for BTC also. Impulsive, corrective, impulsive, corrective, impulsive, corrective. Okay, so this is basically a bearish structure, right? So all you have to do is once again just draw Fibonacci retracement level from swing high or from the start of the impulsive wave to the end of the impulsive wave. This is your impulsive wave, right? So you would draw Fibonacci retracement from the start of the impulsive wave to the end of the impulsive wave, and you would wait for price to retrace back at least to 70.5% fib level, and that's where you would be taking a short position. It's perfectly fine to take a short position because since the downtrend, as long as we do not have a candle close above 64.5K, it's perfectly fine for you to take a short position, okay? Because you are literally just going in the direction of the structure and nobody can stop you. Nobody should be stopping you from doing so because you're just going in the direction of the structure. You are actually doing the good thing, okay? But once again, uh, this is the same exact reason why I did not TP this position. Because I'm not looking to, although price went 4%, 5% up, but I'm not really looking to TP this position anytime soon because once again it was very much anticipated that there would be rejection happening around 64K. Okay, so what we would do is that we would simply just wait for, obviously price is not forever going to have a rejection around 64K region. Eventually it would break above this resistance area, then have a consolidation phase and then come back retest at this resistance area, meaning a full reclaim of this level sooner or later it's going to happen. Okay, that's where we would be taking our first TP. You would wait for the first reclaim of this level. Okay, so as long as this does not happen, once again we are still bearish, and it's perfectly fine for you to take a short position if you were able to do so. Okay, so, what exactly is the logic behind taking this long position right here? Some of you have been asking me about multi-time frame EMA average indicator as well. Once again, this is an indicator that I developed myself, and if I give you guys quickly an overview of this indicator, what it's doing is that you know it's plotting 100 period exponential moving average or whatever period you would select in settings. Okay, and by the way, this is an indicator once again that is very much 12 period, 21 period, 50 period, 100 period, 200 period. Okay, and the time frames they're already incorporated in that. The time frames I have incorporated are 4 hour, 8 hour, 12 hour, 1 day, and 3 day. Once again, what this indicator would do is that it would take and it would plot 100 period exponential moving average on 4 hour time frame chart, on 8 hour time frame, on 12 hour time frame, on 21 hour time frame, on 50 hour time frame, on 100 hour time frame, and then we had a quick buyback happening. Okay, so purpose. Isn't this supposed to be a change of character? No, this is not a change of character, by the way, Michael. This is not really a change of character. I would show you why. Uh, so you know, there have been only two instances when price has returned back to these levels. When price has returned back to this MTF, this multi-time frame EMA average. The first one was back on 21st of December 2023. Had a huge upside move followed by a huge downside move. Since was taken back on 21st of October 2023. This is the first instance that price has returned back to this resistance area. Okay, so around 61K, because this in my opinion is a very is actually a very big thing, right? You can actually see that price gave a very beautiful retest at this MTF EMA average, and then we had a quick buyback happening. Okay, so the thing is that there is this horizontal support. The second thing is that we have MTF EMA. The third thing is that once again we have a deviation move happening. So if you guys have been watching some of my previous live streams also, I always say that whenever you see these sort of deviation moves happening, whenever you see these sort of deviation moves happening, just to give you guys once again a quick recap of that. Let's suppose that you have a resistance level around here. Okay, so price is rejecting off this resistance area. Okay, so what the next time price would return back to this level, what exactly would be happening? All those people who are seeing the price rejection happening from this resistance area, and by the way, this is the same exact thing that went wrong with BNX, with BMX also. Position on BMX, the same exact thing happened. The best opportunity to take a long or a short. Okay, so price returns back to this resistance area. What exactly would be happening? All those people, you know, who would be looking at this resistance area, they would be thinking that okay, this is a resistance area, so let's try to take a short position. But what price would eventually do is that price would eventually break back up and then fall immediately back down. Okay. Now, what exactly is happening in this situation? I would try to explain in the best possible manner. you know People who are taking the short positions, where exactly are they placing the stops? They are placing the stop losses just above this resistance area. So as soon as price would start breaking above this resistance area, three things would be happening. The first one is that people would be panic closing their short positions. Second thing is that people would be getting stopped out of their short positions. Third thing is that all those short positions, they might just be getting liquidated at this region around here. Okay, so in all these three instances, the short positions they're getting closed. Okay, now as soon as price would break above this resistance area, these people were amateurs, and they wouldn't really wait for any sort of confirmation, and they would think that okay, just has flipped this level from resistance to support. So they would try to take a long position. And by the way, all those market makers, all those institutions, they would have their short positions placed around here. The region or the place where you are placing your stop loss is the place where they are placing their entries, right? Because the original move, it's still downside, but there was supposed to be a deviation move happening around here. So these people, these immature people, this simply just switch their bias, okay, from short position to long positions. Now, as soon as price would once again fall back down because all those institutions they already built up their short positions around here, once again all these long positions they would be suffering the very same fate. Okay, either they would be panic closing their long positions, either they would be getting stopped out of their long positions, or they would be getting liquidated out of their long position. In all three instances, the short long positions are getting closed, which means selling is taking place, and that's how you would see an aggressive move towards the downside. Now, deviation move happening as soon as you spot a deviation move, always try to enter into that position, place your stop above or below, depending upon if you're taking a long or a short, and then try to target the new regions ahead. Okay, so in this situation as well, the first confluence is that you have a horizontal level around here. The second confluence is that you have a deviation move happening just below this horizontal level. Price falls down, price breaks below, then immediately comes back up in this region. What you would do is that you would immediately take a long position. Okay. The third confluence obviously is this, multi-time frame EMA average. Okay. So these three confluences were the basic reason behind building up this spot position. And obviously, I did mention this in my channel also back on 24th of June, that, next 48 hours, the bottom would happen in next 48 hours. And this is what exactly happened. On 24th of June, like around 9 p.m. we had this candle, which marked the bottom and which still, in my opinion, is the bottom for this move. We shall see, what exactly happens in future. But yeah, in my opinion, guys, it's very unlikely that we would break below this horizontal level and then we would break below this MTF EMA. It's a very unlikely sort of situation, but yeah, anything could be happening. The structure it's still bearish. Structure has not turned bullish, right? For structure to be bullish, we still need to break above 64,500. But yeah, I'm very much confident that we wouldn't really be breaking below these levels, and we would have a clear move towards the upside. The rejection is understandable because as soon as price would break above this level, it would have a rejection around 67k also. Okay, and then you would have a rejection around 72k, 72k also. Okay, so these levels they are very understandable because price would have this sort of reaction, and it's very common for price to have these sort of pullbacks. But still, in this situation, this was a legitimate short position that you could have taken, and this is a very in my opinion, a very understandable move because resistance area and because equal highs being formed and because this is a false retest. Okay, coming back to your question, Michael, the reason this is not a change of character is because if you would focus on a downtrend, this is a downtrend. Price needs to break above the previous high. Price needs to break above the previous high. Above this high, then this would be an indication that price is giving you a change of character or market structure shift and it's going to reverse its direction towards a bullish trend. Okay, but as long as price moves in between these highs and lows, you know it wouldn't really matter what exactly price is doing. It would simply just be termed as internal structure. As we can see, there have been multiple highs and low being breached, but this is not really an important thing because price is staying between this point and this point. It's very important to be able to differentiate between external structure and internal structure. So anything that's happening in between this high and this low, it's basically internal structure, and this high and this low, they are basically external structure points. All right. Okay. All right, guys. Perfect. So, you know, since I have set up everything for my, for my studio, so I would be doing live streams, possibly every single day of the week. Not sure about Saturday, Sundays, but yeah, I would be streaming every single day, around the very same time, possibly like 2 to 3 hours earlier. But yeah, I would be doing that. After this, tell us about Soul also. I want to know. So for Soul, we actually have a spot position. You can do it. You can enter into that spot position. Our entry is at around 138 or 137. Yeah, this is our entry 137.5. If if price if price permits you to enter into this position, it's perfectly fine for you to do that. We have not taken TP on this position. I'm not really going to do that as long as price does not hit 162 or at least $163. Yeah, every possible reasoning related to the position about related to the position about Solana. I've already mentioned it in my channel, so you can read it there in my channel. Do you immediately close BNX if it goes above after the 4 hour candle close, or you wait a bit? I would just wait like 1 or 2 minutes, and then I would give the update. As soon as the live stream ends, I would give the update related to BNX. I would take a look at it, and then I would just give the update straight away. But yeah, it was always a very risky position because once again, I did mention that it's literally being sailed by every crypto Twitter account, right? So it was a very risky position. So if you need to close, right? Yeah, I would be updating as soon as the live stream ends. I would be updating if you need to close. I think we would have to because once again the pump it's already in the top gainers, right? We cannot fight something that's in the top gainers already. All right, guys. See you, possibly tomorrow. I would update the time. We are still working on the schedule. So yeah, I would connect back with you guys tomorrow. Uh, See you. Take care and have a great week ahead. Thank you. Can you please check your DMs or send me a message a while ago? I really need your help with something. Yeah, sure, Michael. I would do that. I'm responding to you shortly.